Quick hits. This is the part of the show where we talk about three things that have caught, I guess, my eye or have been on my radar over the last couple of weeks, and a lot of things spoken about in the news. And I'm sure a lot of you watching today would probably recognize these. Oil dropped steeply with what's going on in the Middle East. Israel's retaliation against Iran. They did not target their energy facilities, and oil prices dropped. We'll show you a chart on that. Canadian government recently spoke about immigration and their cuts to immigration over the next year or two. And now the cuts of immigration, remember, immigration has really helped taken GDP higher in Canada because we've brought in so many people in the last few years that GDP has gone up with that. Well, now that they're cutting immigration, slowing down the immigration, a lot of economists are having to pull down their numbers. And we'll expand on that. And our third point, what does the US election mean for the markets? What we mean by that is, let's say we don't know a winner come Monday night before we all go to bed. What does that mean for the markets come Tuesday morning? Will they be up? Will they be down? So what does the election mean for the markets? So let's address the first quick hit, which is oil prices. Oil prices have been dropping steadily, exactly like that illustration is showing us. And for a little while there, when Iran sent 280 some odd missiles into Israel, Israel vowed to retaliate. Price of oil spiked. It spiked up well above $70 a barrel, still nowhere near 80, 90, or even $100 a barrel that many were anticipating, I guess, at the start of the year that we would see. But it ran to about maybe $70, $75 a barrel. And now, maybe slightly over, maybe 77. And now with Israel not attacking their nuclear facilities, their refineries, and their energy infrastructure at all, they held their attack to more military positions. Price of oil has not, or really hasn't stopped going down, to be honest. It went well below $70 a barrel and now sitting in and around $67, $68 a barrel. We have a chart to show exactly that. Here you have on the far right-hand side, you can see the steep decline on the right-hand side that goes right below $70 a barrel. What do I think is going to happen with the price of oil? Well, if you factor out the geopolitical events, you could see maybe oil somewhere around $50, $60 a barrel. I really believe that the geopolitics is keeping the price of oil where it's at. And if you go based on a supply-demand dynamic, and if OPEC plus, which is OPEC plus Russia, were to increase production because they've reduced production over the last few years, you could see the price of oil move significantly higher. So keep an eye on oil. For all of you that have oil investments, oil stocks, definitely something to keep an eye on. Second quick hit I wanted to address, Canadian government immigration. They cut immigration, and that's caused economists to take down their forecasts for GDP, because on a per capita basis, we know GDP has been stagnant. But when you factor in the immigration, GDP has been closer to 2% than the flat line and the 1% level. We have a chart here that shows, I think it's a great chart, actually, one of my favorite charts of the show. This is new immigration policy to slow population growth dramatically, and that's important, right? Here you have natural population is the darker green, so you can see it's not really happening. The permanent residence is in the light green. You can see a forecast there from Desjardins is the black line that's coming down and now starting to go up recently. And then the dotted line is the Bank of Canada forecast. So immigration plays a big part in the economy. How many people we bring in to this country will have a direct effect on how much money is being spent in the economy, GDP growth, how businesses do, and obviously employment, right? It has a big effect on employment. A lot of businesses are upset because they get some of their best workers are people that have come into this country with some sort of background from the country they came from, whether it's a degree or a doctors or nurses or someone in manufacturing or whatever part of the economy. So I know a lot of businesses, a lot of small businesses are not happy with a cut in immigration levels. So we'll have to see how this all works out, how it'll affect GDP, how it will affect small business. Dan Kelly has spoken about this recently as well from CFIB, who we had on just a little while ago. So immigration definitely plays a part in the economy. Third point I wanted to discuss, and something that has come up a lot lately has been, what does the US election mean for the markets? And interesting enough, and in an election year, there have only been really very few times that the market hasn't gone up in an election year. I think it's only two times actually. And there's a chart we have here. The best election year stock market of the 21st century, the best election years. There you have it. And you can see 2024 is the best. It is the best election year that we've had since the 21st century has come in. I guess the worst is 2008. You had almost a negative 40% return. Now that coincided obviously with the financial crisis, so that is probably why that happened. But usually you see positive returns, and I make I throw out the case. What happens if we don't have a winner come Monday night? What happens if they're counting ballots? What happens if there's a challenge? We've seen a challenge before with former President Trump. What happens if there's a challenge? What happens if it's too close to call? What would the effects be on your investments, the stock market? I got to believe they'll be negative, because with any uncertainty, the market usually does not like it and moves to the downside. So what does an election mean for the markets? It could mean some negativity in the short term until we get a winner, until we understand what the new person in the White House will mean for the economy and the markets. So overall, what does the market look at? They want to see stability. They want to understand if it is a Trump, former President Trump, if he's in the White House, people want to know, okay, increase in tariffs, but a cut in taxes. If Kamala Harris, vice president, current vice president, what does that mean? Well, an increase in taxes perhaps, but not an increase in tariffs. So investors are just looking for certainty. So what the markets mean is perhaps some uncertainty. And if that were to happen, I would anticipate the market could pull back in the short term right after the election.